The S&P 500 and the Nasdaq 100. Let's get right into what's happening now. This week specifically, I don't have that much news really coming out, but I did want to talk about the price action and what's taking place specifically going into today. Now, something that I'll let everyone know is specifically in Discord and something that I was looking at on the day. If we come to something like the 2 hour to give you a better visual, and I posted this on Twitter. If you're not following on Twitter, I recommend doing so. It's just the easiest way I can post quick updates. Like this morning, I posted an update on SPY, Qs, Meta ended up printing like crazy, but we'll go into that here in a second. But when you look at what's happening, you can see that on the 2 hour, we can see this about 11.44 range was huge, right? So we can see it was a major level. And then on the after hours, basically from when futures opened last night into this morning, what happened? You can see kind of really the writing on the wall. You come up, you test this range of about right here to almost 11.44. And this is around 4:30 in the morning, and then right near market open, you start to see a scale down and start dropping. This just showed the weakness, in my opinion. So before even massive volumes started taking place, we saw London, we saw Asia markets trying to kind of push us down a little bit. Obviously, America, the U.S. market opens up, and boom, we start pushing down. Now, when we go further into this, we can look at stuff like Qs and SPY. And this is where things get really interesting for me. So what I want to do really quick is go about the 4 hour chart. So you can see here. And if we go to the daily gap fill, so this is your daily gap fill, your last gap that you had on a daily time frame. Those are the most important gaps to look at, besides, of course, thigh gaps. But besides that, when you look at this, you can really see what's happening here, because these are going to be the ones that get filled 99% of the time, and it's coming down to that point. Now, when we look at something like SPY, it's important to look at what's happening here. That daily gap fill was right here, and it already had been filled actually on Friday. So these are interesting things you need to be looking at and watching for specifically on the market. So looking at this, I'm not saying we found a bottom, but I am saying that it's possible going into tomorrow we could see a little bit of a relief. Now, I'm not playing any relief because right now, I'm bearish. From all viewpoints of the market, everything points to more downside. When we look at volume, what's taking place, we're going to look at more stuff here in a second. It's pointing to more downside. But in a short term, I would not be shocked or surprised to see us get a little bit of a bounce after we fill these gaps, because Qs most likely, like I said, if we come back into that chart, you can see we are very, very close to filling it. We're about like 50 points away. We'll probably fill it before the day's end. I had to make this video a little bit earlier in the day. It's still posted around 3:30 roughly for everyone, but I had to make it a little bit earlier just because I had some stuff going on with my family. I have my son for Christmas, so the schedule's a little bit all over the place. Before we get into any more content, I have to ask you to consider doing two things: liking and subscribing. As you can see, every day I post videos for you, at least Monday through Friday around 3:34 p.m. Central, and then usually I post on Sundays. This past week I could not have my son. I'm just so busy. Again, Christmas holiday season, but I try to make as much content for you guys as possible. Follow on Twitter also to get more updates, more frequently, no matter what. So let's get back to the chart. Now, when we look at what's happening, you're obviously pushing down, probably going to fill this gap, hit that. It's my overall goal. Now, I want to talk about a few stocks before we go any further, specifically Apple, and I want to talk about some other ones here in a sec. But I've been really heavy on mentioning Apple because on a weekly time frame, it's really important that we watch some of these big equities, because they, in my opinion, can give you a better visual of what's going to happen on the indexes. Okay, looking at Apple. You've had this weekly pennant kind of forming since 2020, higher lows being established and, holding over time. Now, the big thing here is that we were making lower highs on a weekly level. Then we can also see we just stopped retesting that top range up here, which was pretty bad in my opinion. And then today we got confirmation. We broke and are holding below this on the daily time frame specifically, and now the weekly. The question now is, are we going to go further? What's going to happen from this? I have to expect, since we broke and held below 134, like I warned people on Twitter, this is why I recommend following on Twitter, just so you can see my updates. And again, I'm never trying to scare anyone, and it's not financial advice, just giving you a different perspective. Everyone was talking about on Friday, go long on 134, go long, go long, go long. But what happens if you didn't hold that? What would happen if long started to liquidate some of their positions because they expected more downside from getting below that level? And I think that's exactly what we're seeing right now. You saw that kind of flip, and then guess what happened? Boom, sellers started to attack the market, right? Same thing goes for Meta and what happened there. Meta was an awesome play. You made a lot of money there. I mean, I made a lot of money there, and it just worked out really well. The Meta made about 1,300 here on that play, posted that for everyone to see. You can see what happened with Meta. You had that kind of descending triangle, broke below, and obviously today we ended up dropping pretty significantly down to these levels also. Came all the way down to about, I believe it was, the low 114s, I do believe. about mid 114, but it looks like you're going to keep dropping down, and you're trying to break this, higher low trend that you're forming here also. So that's what we're looking at. And just to give you a little food for thought, to show you guys what I was doing on my position, on my metas, I ended up closing most of those. I closed half at around 550, closed the rest at around 595. And then I left 2 runners just to let them go. And I still have those because they're for January 20th. Got in around 545. Try to always be transparent and show what I'm doing and what I'm looking at. I do have an NVIDIA position also, but I have reduced that to a smaller size because it's a little bit riskier. But when we look at the market, this is ultimately what's happening right now. I believe we're moving down at it's pretty slow pace. I don't think it's immediate selling or anything crazy, but I do want to say, if we look really quickly at what's happening, JPMorgan did just announce something pretty significant, and I do want to go over that. So if we look really quick, JPMorgan selling at the end of the year. I like to go over this so you guys can see. But basically, JPMorgan said today that the bear market rally reached the perfect level and that it's a sell into the end of the year. This is not my opinion. This is what JPMorgan's saying. So I do want to highlight that. And you're seeing this kind of happen into the end of the year. And they keep saying it. So again, I do want to highlight that JPMorgan has been probably the most transparent among all people out there with their reports and being really honest. And I do want to highlight last year, what did they say? They said the volatility indexes would be the best overall, I guess, ETF to trade with the most potential upside. And they were kind of right when it came to the upside potential there. And now going into this year, they said we test local lows at least in quarter number 1 or before quarter number 1. And it's looking like that's coming in. So I do want to say that JPMorgan has been on top of their game. And if there's any reports that have been reliable, I will say that it has been theirs. If we look at Deutsche Bank, if we look at anything coming out of Credit Suisse, those have been overly optimistic and overly bearish. But I will say, if you look at those charts specifically, let's look really quick at Credit Suisse, right? They're near possible all-time lows. They're really getting destroyed out here. We look at, what's happened out of Deutsche Bank, right? DB, right? Coming in, what's happening here. They're up a little bit here when we look at, the hourly time frame. But if we go out to something like the daily, I do want to highlight that these guys, they were getting hit back in October, and they just don't want to go back down. So I want to say that these European banks have the most reason to kind of manipulate and lie. So that's worth mentioning. The American banks, I'm not going to lie, they've been on top of their game. They've been honest with you. That's just to my knowledge of what I've read and what I've looked at and based on their data and how the markets performed going after that. So a little bit deeper, I want to talk about VIX because I know there's going to be questions about this. Again, if you know anything about VIX and you're going to ask questions about VIX, you need to understand a few things. And what are those few things? Is that VIX does not move based on the SPY going up or down. That is not why VIX moves. VIX moves based on the derivatives market, the end. So what does that mean? If there's heavy amount of SPY puts, there's a heavy amount of SPY calls, there's a lot of options coming in on the S&P, then VIX is typically going to move a lot to the upside. It's going to start moving volatile. That's why sometimes you've seen the stock market go up and VIX go up also. Not like dramatically, but it's something that we have seen. So I do want to just go over that specifically now. Now, I do think VIX could still spike, and I think if VIX spikes, that'd be pretty detrimental for the market. I think that would be pretty bad. Very rarely do we see the VIX spike and the market not get hit. But I do want to say that just because you're seeing downside right now does not mean that the VIX is not getting, that the market is going down. It's not justified. I want to say that right now. Sorry, a little bit of a tongue twister. It's also a possibility that you're finally seeing that tax loss harvesting. People are saying, well, Tyler, didn't that happen back in November? I'm just saying I would not take my tax losses 3 to 4 months before I file my taxes. I'm just saying that's not what I would do. I'm not going to speak for anyone else, but that just doesn't make sense for me personally. I would probably wait till maybe it gets closer to tax season, food for thought, do whatever you got to do. So that's what I'm looking at specifically on that. And so I do think that that's why we're probably seeing less movement here on VIX, is that it's just sellers coming into stock right now. But I do think it's a possibility, and it's worth mentioning that I do think this options market will start to heat up very soon once again, whether it's to be the upside or towards the downside. I don't know, but I do believe the options market is going to continue to heat up specifically into the beginning of the year also. So I don't think VIX has room to bounce once again. Going into the DXY again, because I know I'm going to get silly, stupid questions here. The DXY. So people keep asking me, Tyler, the DXY is dropping. Why is the market not going up? If you don't watch my Sunday videos, then you probably don't have a full understanding. But basically, the ECB and what's happening in Europe and going on in the UK, they're going to continue raising rates, and they're not even close to stopping. They've already said that America's a lot closer. So That's going to strengthen their currency versus ours. And then we also have what's happening with China with the petrodollar. Basically, China's making all the oil going through China to be done in the Chinese yuan, and Saudi Arabia agreed upon that. So that's going to strengthen the Chinese currency. So you need to understand that. So the US dollar has a lot of factors that are weakening it right now, which is why the DXY is going down and the stock market isn't really pumping with that like it was back here. That's why I said once you got below 109.5, there was a lot less correlation on the DXY, so I stopped paying as much attention to it. Okay, I'm pretty consistent with saying the same things to you guys, and you're not going to really catch me saying, you know, twisting my words or changing it up too much. So, and I will admit when I'm wrong. That's the big thing I'm looking at here. Next up, the US 10-year versus the US 30-year. I do want to highlight this and where you're at here. Again, you know, you dip and then you bounce right back. So I do want to say right now you're still dipping a little bit on the inversion here, the 10 to 30 year. People keep saying the 2, 10, whatever. Look, I'm just talking about from my preference, and when you're trying to spot whenever you have very high inflation and is one of the last ones to invert, the 10 to 30. It's one of the last ones that usually invert. Okay. This is what I use. If you don't like it, use whatever you want. I don't really care what you do or don't like. There's a reason why I am talking about this, and there's a reason why you comment and continue to hate every single day. And, you know, I encourage you guys to be skeptics. I encourage you to question everything that I say, question everything that I do, because you need to do your own DD, because at the end of the day, you are responsible. But I want to highlight the trend that's been established here on the 10 and 30-year inversion. As you can see, making higher lows for literally 2 years here. Now, if we go back a little bit further, when was the last time this happened? 2018, we had a pretty big drop on the market. We go back further, the housing bubble back here, 2006, almost 2007. It was one of the leading indicators going into the housing bubble and that we were going to be flipping into a recession. Going back into 2000 flat, we had the dot-com bubble. These are big cases, and guess what? It's happening once again, and we're staying here. Remember when we inverted the first time? I told you guys this was going to be a battle. It was going to happen for a while, and guess what? It's taking into place. Next up, TLT. TLT has been something that's been probably one of the best indicators on the overall health of the economy. TLT continues to gap down and down and down and down. So this is definitely a concern for me. You definitely want to see TLT bonds. If you're expecting any strength or a bounce back or trying to find any strength of buyers, you need to see TLT bounce back. It's just not bouncing right now. But yeah, so big gap down today, steady to the downside through lunch, and then you kind of bounced up here. But you're going to need a continuation, and you're not going to want to see these gap downs. That's continuous hurt and pain on the market. Going into some stocks that I'm liking, let me go really quick. We're just going to look at a few ones, big names that I'm liking. One, NVIDIA. I think it's probably the most upside play that you have. But I want to tell you right now, NVIDIA is a little bit dangerous because of the way it moves. And I think you have to have time. So what I was doing, and Jay's the one that called this out in Discord, I went for the 155s for January 20th. I like the price of them. They move really good also. But I do want to say, you're still kind of making these higher low trends here, right? So I just want to highlight what's happening. And this is the daily chart, so bear with me. But if you look here, you can actually see you still are trying to make that little higher low trend. So that is worth mentioning. You're holding that right now. Now, what's the big inflection point? Again, going back down to what we said with the last time we were trading NVIDIA, right? We had that nice downside. We were up really good on the position, but we weren't really interested in the like quick scalp, or I wasn't, right? I was not interested in making 10, 15% on NVIDIA. I wanted to catch the big move. I wanted to see the big breakdown to 150, possibly 140. That's what I wanted to see. And as we look here, I want to just go on what's happening. This 162 level is a major inflection point. If you come in here throughout the day, let's just look at the day trading levels here at the 5 minute. I mean, you held this all day long. You tried to push up and sellers kept pushing it down. You did make higher highs here and, you know, higher lows. But ultimately, you just push right back down. So I do think that NVIDIA is weakening. But I just want to say that combined with what's happening to Qs and Qs, you know, filling that gap, that there's a lot of inherent risk here. But I think NVIDIA and the semiconductor sector in general has a lot of potential downside. Because right now, they aren't dropping as quickly as everything else. Like, for instance, if I look at something like XLF, and we look at the financials. Sorry, it's taking a little bit of time. You can see financials have really been getting hammered here on, like, let's just go to, for instance, about the 2 hour or the 1 hour, so you can get a little bit for it. For instance, remember I was talking about shorting XLF in the Bank of America? It stopped out. It's unfortunate. It was a little, you know, bear trap right there. Anyways, so you came in and you just started dropping. You know, we can go, you know, XLP, consumer staples, dropping, right? Now, when I go to SOXX, this is where things get interesting. Yeah, you're dropping, but in relativity, you were the strongest sector overall. So in comparison, all other sectors really just hit the highs up here, like 361 in comparison. Whereas the semiconductors went parabolic and went crazy. I mean, they had a really good run, and then they're now dropping back down. But if we look at the comparison here, Nvidia, in compared to like what 52-week lows, you have a long ways to come down. So that's why I like Nvidia. Looking at AMD, you're about halfway there, but you still have quite a bit of a ways to go. So I do want to say that with semiconductors, that's the really big thing that irks me and that kind of concerns me with this sector in general. Now, the next sector I'm going to mention is going to be banks. And a lot of people kind of got confused with why I don't like banks, and they're dropping now. So looking at banks in general, I like Citigroup, I like Bank of America, I like Wells Fargo. Those are my favorite ones right now. If I'm going to Targets, still the same. It was down here locally to around 42.5 to around 43 flat. That's target number one. And then obviously after that, we're targeting, 52-week lows down here. But that's what we're looking at. And to give you a food for thought with why I'm looking at banks, I want to be really clear. People are saying, well, if banks are having higher interest rates, won't they make more money? Well, no. So why banks were doing so successful during COVID was because yes, interest rates were lower, but you have to think they're not just raking in all that money. Some of that money has to go back to the Fed, back to the government, etc. And I want to highlight here, less people want to take out loans when the interest rate is 7% rather than down at 0.5%, right? I don't want to buy a house right now and pay triple what I was going to pay in mortgage when I could have bought it 2 years ago and paid far less. Even though prices may have been a little bit inflated, I'm still paying triple for the house that's worth half of what it was before. It doesn't matter, right? The mortgage may be lower overall from the grand scheme of things. It may be a $200,000 house, but if I'm paying 10% on that rather than paying 2%, 2 years ago, it's not really that good of a deal still. So you need to understand that people just want to do less business with banks. So Bank of America, BAC, Citigroup, Wells Fargo, these are my favorite names here. Bank of America, I'd be targeting down to $29 roughly. I mean, you can go out a little bit. I think that's actually 52s here on Bank of America. I want to make sure before I let you out of here. Yep, that's what we're looking at there. Wells Fargo, you have downside all the way to 36. I think Citigroup has the most potential here, and it's already getting a little bit of a breakdown. 44 is the big level from Friday. I've been calling the same stocks out. Again, I'm not usually switching too much up. But if I want to give you one big sleeper, and again, we've mentioned Apple, we mentioned Meta. Those are some big stocks that played out really well. I do want to mention potentially Costco. I'm not telling you to do anything here, but I do want to highlight Costco is extremely, extremely weak. You broke this massive level at 464, and you can actually go back a little bit further to about the weekly. And I'm just calling out stocks now because I just love the way some of these are moving. But this 464 level goes all the way back here to where you're getting rejected, and then you started dropping back down. But this is what I'm looking at. Costco has a lot of room, guys, down to 400, 410. So I think Costco's a must watch. I think you have to be looking for it. You have to be ready. And I think it has a lot of room for the downside. So I would be watching the XLP sector, Target, Costco, Walmart. Again, shout out to Cajun in Discord. It's his favorite sector right now. Think Target, you're in a clear bear flag, and it looks like you want to, drop. You lose 143. I think you're in pain. I think you have room down to 129. So that's what I'm watching on the market. That's what I'm looking for. You have 52s right here locally at 137. I think there's a lot of pain in the horizon coming for these. So make sure you're watching. Be diligent, though. Again, do your own due diligence. It's not financial advice. You need to be doing the work for yourself. Don't just ask down below, hey, Tyler, what are you targeting this and this? I'm not going to respond to those stupid questions, guys. Do the research. Do the work. Because if you don't, I'm telling you, you're probably going to lose money. You're going to probably go broke trading. And guess what? Then you're going to blame everyone else but yourself. But at the end of the day, guess who's responsible for your decisions? You are, and nobody else. Have a good one.